Welcome back to Pensioners Corner. In today's video, we're looking closely at the rule changes in 2025 that are influencing how HMRC reviews tax records. Many people, whether they're self-employed, running small businesses, or even just earning extra through online platforms, are hearing more about audits and checks. This script is here to help you understand what's going on, what HMRC is really doing, and most importantly, how you can keep your tax affairs accurate, safe, and stress-free. To begin, HMRC is no longer relying on traditional methods alone. They now use advanced digital tools to compare information from many different sources. Their system, often referred to as Connect, looks at a wide range of data, bank transactions, online marketplace reports, property ownership records, vehicle registrations, and yes, even what's shared on social media. The goal isn't to target people unfairly, but to ensure that what's declared on tax returns matches the lifestyle and financial activities already visible in official records. For example, if someone posts photos of expensive holidays, high-value cars, or luxury homes, but at the same time reports very modest income on their tax return, the system may flag that as unusual. It doesn't mean guilt or wrongdoing. It simply means HMRC might open a routine inquiry to understand whether everything has been declared correctly. It's important to remember, audits are not accusations, they are checks to make sure records are accurate. Now, what does this mean in practical terms for ordinary taxpayers? Let's break it down into clear steps you can follow. The first principle is simple: always declare your income. Since 2024, platforms such as PayPal, Etsy, Airbnb, Amazon, and other online marketplaces are legally required to report what their users earn directly to HMRC. That means even if someone forgets or decides not to mention those earnings, HMRC is already aware of them. The safest approach is to keep everything transparent. Even small amounts can matter, especially once they cross the trading allowance threshold of £1,000. Registering for self-assessment and declaring what you've earned protects you from penalties and avoids unnecessary stress later. The second step is to keep proper records. Memory is unreliable, and relying on scattered notes can lead to mistakes. Whether you use software like QuickBooks, Free Agent, or a simple spreadsheet, the important thing is that every transaction is logged. When you have invoices, receipts, bank records, and payout reports organized, you can easily show where your figures come from. That way, if HMRC ever asks questions, you already have the evidence at your fingertips. Third, be prepared to explain lifestyle purchases if they look out of proportion to declared income. Owning a new car, upgrading to a bigger house, or making large purchases isn't a problem at all, but it can help to keep clear notes about how they were paid for. Was it financed through a loan? Was it a personal purchase rather than a business one? Was it a gift? Having those explanations ready means you're not caught off guard later. Fourth, consider what you post online. There's nothing wrong with sharing your success, but if your public profile shows wealth that your tax return doesn't reflect, HMRC's systems may notice the mismatch. It doesn't mean you can't celebrate achievements, it simply means it's wise to be thoughtful about what you present publicly. A common misconception is that very small businesses or casual side hustles won't be noticed. But in reality, HMRC is paying closer attention to them than before. Why? Because small returns are straightforward to check. A single cross-reference between what a platform reports and what you declared is often enough to trigger a letter if there's a gap. Even missing just a few pounds of income can raise a question, not because the amount is huge, but because the system treats it as undeclared. That's why, if you earn even slightly over the trading allowance, it's best to register and file a return. It may feel unnecessary, especially if the profit is low, but it prevents misunderstandings. HMRC doesn't need proof that you intended to avoid tax, it only needs evidence that something wasn't reported. Filing keeps you in the clear. Another area where people often trip up is expenses. Business expenses must meet HMRC's rule of being wholly and exclusively for the purpose of the trade. That means personal spending, even if partly used for work, usually doesn't qualify. For instance, buying a gaming laptop primarily for leisure but sometimes used for business tasks won't meet the standard. Likewise, holidays, personal entertainment, or vague marketing costs without receipts are unlikely to be accepted. On the other hand, many legitimate expenses can and should be claimed: office supplies, website hosting, advertising with proper records, travel related to business, training, insurance, accounting fees, and a proportion of household bills if you work from home. The key is keeping evidence. If you can back it up and show it was necessary for your work, it's usually allowable. Missing deadlines is another simple but common way people attract attention. Filing late increases your risk profile, even if the figures themselves are correct. HMRC systems check not only personal self-assessment but also VAT submissions, corporation tax filings, and payroll records. If one part is missing or delayed, it creates a mismatch that can flag your account. The solution is straightforward: set reminders, use digital alerts, or even write deadlines down somewhere visible. And remember, if you can't pay on time, still file on time. HMRC is often open to installment agreements, but only if the return is already submitted. Mistakes happen, and HMRC recognizes that. What matters is how they are handled. If you spot an error yourself, you can correct it through voluntary disclosure. Doing so usually reduces or even removes penalties. HMRC categorizes behavior into different levels. Mistakes that are openly corrected are treated far more lightly than errors that remain hidden. Trying to fix things quietly in a later return is not the right approach. Each tax year must reflect exactly what happened in that period. If you think something from a past year isn't right, correct it directly for that year. Acting quickly and honestly is always better than waiting. But what if you don't catch the mistake in time, and HMRC contacts you first? If you ever receive a letter announcing a check, the most important step is to respond promptly. Ignoring or delaying doesn't make the issue go away, it usually makes it more serious. HMRC also looks at how cooperative someone is during an inquiry. They even use systems to monitor taxpayer behavior, meaning that clear, timely, and honest communication works in your favor. When you respond, provide the documents requested, stay calm, and don't try to hide gaps. If something went wrong, explain it. HMRC is not only checking numbers, it's also checking reliability. Showing that you're willing to work with them can make the entire process smoother and quicker. So let's step back and look at the bigger picture. Whether your income is large or small, whether you're self-employed, freelancing, or simply renting out a spare room, most of your data is already being reported to HMRC by third-party platforms and institutions. That means transparency is no longer optional, it's automatic. But that's not a reason to panic, it's simply a reason to stay accurate. The safest way to avoid issues is to declare everything, keep good records, claim only what you can prove, file on time, and if necessary, make corrections voluntarily. If you follow those principles, there's very little reason for HMRC to open a detailed inquiry into your affairs. At Pensioners Corner, we believe knowledge is power. Understanding how these systems work doesn't just protect you from penalties, it also gives you peace of mind. Nobody enjoys receiving letters from HMRC, but when you know that your tax affairs are in order, there's nothing to fear. So whether you're running a business, working freelance, or simply earning extra on the side, the message is the same: keep it honest, keep it organized, and you'll stay on the safe side. Thank you for watching today's video. If you found this information useful, please consider subscribing to Pensioners Corner. It helps us continue bringing you clear, helpful content without confusion or unnecessary worry. And remember, if this video isn't for you, you can always unsubscribe, no problem at all. Take care, stay organized, and we'll see you in the next video.